Good morning. I'd like to welcome you very cordially. It's very nice to welcome you here to our conference to present PKP CARGO Group's results at H1 2018. My name is Andrzej Banucha, and I'm the Deputy Director of the Promotion and Investor Relations Department, and so I'm going to run today's meeting. I'd like to introduce the Management Board of PKP CARGO, Mr. Czesław Warszawicz, who's the CEO, Mr. Leszek Borowiec, who is the CFO. We also have Mr. Grzegorz Fingas, who's responsible for sales. We have Mr. Witold Bawor, who's responsible, he's the COO. And we have Mr. Zenon Kozendra, who's a representative of the trade unions. We're also joined by Mr. Krzysztof Losen, who's the press spokesman for PKP CARGO. And I would like to encourage you to talk with him. And we'll have an opportunity to have some refreshments after today's presentation. So I'd like to go ahead and give the floor at this time to the CEO, Mr. Czesław Warszawicz, to deliver the presentation. So I'd like to welcome you very cordially, ladies and gentlemen, on this day that's still part of the holiday period, the vacation. As I kick off the presentation, I'd like to communicate to you that as we're trying to improve the standards, we're speeding up the date of publication. We want to implement this practice, this best practice, because historical data is less important. We want to communicate to you as quickly as possible the information about the past, and this testifies to the quality and as we try to strengthen our position, and it also shows the attention we're paying to investor relations, to shaping relations with you, as well as being transparent and fully reflecting the potential that's in the company. And that's why it's nice to be able to communicate to you that through our press reports, through our current reports, we have very good results for H1 2018. If we look at the freight, if you look at the financials, if you look at the market, if you look at the qualitative side of things. So as we look at H1, we have revenue in excess of 2.5 billion, which is 11% more. And so this is the highest since the company went public. The same is true of EBITDA, 423 million. And so this is more than 27% from last year. And so it's the best EBITDA result that we've had since going public. The same is true of our net result. 90 million is the net result. These are the results of the group. I pay great attention to the group results because this testifies to the strength and the value of the organization. If we look at some more detailed data, we've seen very good commercial results on our freight operations. We're up by 3.4% compared to the corresponding period of last year. And we're substantially above what we saw in 2016. So we have 59.6 million tons of cargo transported, which is roughly 2 million tons more than 1 year ago, and more than 7 million tons more than 2 years ago. And so we've maintained a stable position in terms of coal. This was 25.3 million tons, the largest growth rate we've recorded in aggregates and construction materials, because we've transported more than 12 million tons, up 35% over the previous year. And it's some 60% higher than a couple of years earlier. And so this was great growth. We've also seen similar growth in intermodal transport, which is nearly 20% up over the previous year, 4.4 million tons. And it's basically doubled what we've seen 3 years ago. So we've been able to double our freight transport, and that's why intermodal transport is going to be our key area of specialization, and we're going to pay a lot of attention to the intermodal transport also in our strategy. And so we're going to spend a lot of, or devote a lot of attention to that as we continue to cultivate and develop that market of cargo. And if we look at the financials, our revenue was up by more than 11% year on year, and so 18% over 2 years ago. And so it's the highest amount of revenues since we went public, 2.51 billion. And so then our EBITDA is up 27% over last year at 423 million, and some 3 times more than what we saw in 2016. And so it's the best EBITDA result we've had since going public. The same is true of net result, so 90 million as opposed to 19 million. And so we're up 363%. And so one of the things that contributed to this, but not only, was cost discipline, the fact that we pay a lot of attention to how we manage costs, how we optimize our operations in terms of utilizing our resources as best as possible, making changes to the organization of transport. As you see, we had more than 7 million tons more than 2 years ago with this similar number of people, a similar amount of rolling stock, which means that we've been able to improve our efficiency substantially. Our costs have grown year on year by 7% nominally, compared to 2016, more or less at the same level. But at the same time, our unit revenues have grown by 8.4%, and our unit costs at ton kilometers was up by 4.7. So the growth rate of costs was half the level what we saw at the revenues, and this contributed to the substantial improvement in our financials in almost every category that I've talked about. If we look at the cash flow and what's happening on investments, we can see on operating we're much better than we were before. The free cash flow that the company has at the end of the mid-year, so 841 million zlotys. And if we look at financial ratios, our return on assets, equity, and so on and so forth, are much better. Our debt structure is quite stable, so you can see that the company is safe on a financial setting. And so the debt has fallen by nearly 300 million year on year, showing the good, stable position of the company. The capital expenditures that we've done were focused on improving our ability to transport goods, and this has been underpinned or is evidenced by what we've actually delivered. We look at rolling stock investments, 303 million. And so we think there's going to be a peak in freight transport, which will last for the next 3 to 4 years at the least. And so we're using our rolling stock at 100%, even beyond 100%. And so these investments are viable across all of the parameters and financial regimes that one can consider. I think in a moment we'll talk about our forecasts for this year. On the investment side of things, we're only doing those investments that give a positive IRR or give us a very short payback period. And after that analysis, sorry, I have to go back to this one slide, but we're going to follow those projects which generate the highest financial return. The key areas of growth where we're focusing our attention, and this is going to be part of our strategy update, where as a group and the Board of CEOs. We're going to discuss the first draft has already been set up. I think we're going to present this to you in the final version in the fall. We're going to go in the direction of tapping into the potential of the PKP CARGO Group and greater integration, which should lead to very good financial impacts as a professional logistics operator in order to reduce costs as we integrate, but we also want to offer better products, a better offer to our customers, our clients, because the most important part of our strategy is the client. The client is at the very center of everything we do in terms of our integration, in terms of the optimization. We want to improve our offering and we want to refine it, align it to the needs of the customer, of the market, of our business partner. And so this development will take place also on an international footing. We would like to intensify that. As I said, one of our key specializations is intermodal transport. And here we are active in the north-south corridor, the 3 Cs initiative. We have a number of strategic agreements we're going to communicate to you. We're also developing the new Silk Road as well as the Far East. And so that new Silk Road is something that we're continuing to improve. We want to make sure that we're able to transport more goods along that new Silk Road, along that direction. And so international development will move in the direction of being able to transport more through intermodal transport and to make sure that we're amongst the best for B2B transport. What does that entail? That entails, of course, market share expansion on the global market. We want to be a very strong and active entity that will improve its position on the global transport market. And I've said a few words. I'd like to say a few words about the update of forecasts and the investments and looking at the market situation, changes in processes, what's happening internally. We've tweaked some of our processes in the most recent period. And so this gives us a guarantee of being able to achieve our forecasts, which are much better, which we had originally planned or even published in terms of the group's EBITDA. As I mentioned, we're interested in the group results, and this is where I'm going to focus my attention at this time. We would like to improve our forecasts of EBITDA to some 950. So we want to be better by 16%. So we want to be above 900 million. So we want to come close to 1 billion. It's going to depend on the market situation, the market context, what's going to happen with growth rates. But we're saying the minimum is 905 million, but we'd like to be 950. So we want to at least get to that 905 million. I've mentioned capital expenditures. We plan to reduce them by nearly 140 million as a result of our investment regime, which is linked to the financial returns. And we're only going to do those projects that are viable, economically viable, and improve our capacity to transport goods. And so we'd like to invest 878 million zlotys in order to have even better transport capacity. So we had around 300 million invested in the first half of the year, another 500 million in the last half of the year in order to have greater freight turnover and to improve our transport results. And that would be more or less it from my side in terms of an introduction. What we'd like to do now is do a Q&A session. I think this is the most important part of the session from your point of view. I'll ask my colleagues to support me if you're going to have drill down questions. You may have questions that you'd like to proposed directly to some of my colleagues, and so myself and my team were all at your behest at this point in time, and so we would invite you to pose any questions you may wish to do so at this time. I'm from Raiffeisen. I'd like to congratulate you on having very good results. I'm sure they result to some extent from having higher prices. Prices are up by 10% on a quarter basis. That's how I've calculated it. I'd like to ask you how you see these changing prices in upcoming quarters. What was the source of those price increases, price hikes? Which segments saw the biggest price hikes? What's your take on the market context? Maybe I'll say a couple words at the beginning and I'll ask Grzegorz to add some commentary. Naturally, the results are the blended results of everything we've done together, and there are a few contributing factors. I would refer your attention to organizational changes, optimization, which means we're able to do things less expensively, but at the same time we're transporting more. Price is part of the market interplay. Some things have better results. There are industries that have better contracted terms, others with worse contracted terms. And so we have price increases for some commodities, whereas the costs of fuel also have grown because costs of access, the costs of various services on the market have also grown. Sometimes they can fall. So we can say that this is a market interplay, and the wisdom of management is to be able to find the right position on the overall market. And what we've communicated to you about tenders, some of the tenders that we've won, above all for coal, for Enea, above all, and some other suppliers. We communicated to you that we would transport 5.5 million tons of coal. And that's a large amount of coal, and we're very pleased to have given the best offer. And of course, it's a matter of market play. So the unit price growth takes place, having in mind also higher costs of transport. It's not easy to say, oh, we're all very happy because prices are growing because we're getting a better margin. It's true and it's not true. In order to transport, we have to do 3 times more freight than we've done in the past. So to say that the price is higher by 10% or 15 or 20%, it's not entirely a warranted statement to say that, because we need more resources where we would have a lower speed, because we have to transport over a longer distance. And so we have the skill of organizing that logistically. And of course, it's a profitable undertaking because the overall organization is prepared to optimize the transport process. So it's not a simple definition. And we can say that the price has bumped up, and we're pleased as a result. We've generated a better return. So we have costs, and so when we talk about tenders like for Enea or other tenders in which we've submitted bids, other market players, logistics operators, carriers are able to submit bids as well. So you have a different cost per ton kilometer as opposed to 1 year ago, 2 years ago, or 3 years ago. So I wouldn't say that this is just a matter of prices simply jumping up and now we have profits, and then prices would fall and then we would have losses. That's not entirely a substantiated statement. We have to add in all the other elements. And so we're looking at this and we're doing what we can because we would like to earn a lot and a lot more during the peak periods. And we'd also like to earn more when the markets will fall because we have to utilize our skills to calculate our costs depending on the overall market context. That would be sort of an overall statement about prices. I'm not sure if Grzegorz wants to add something. I'm not sure if you've gotten the response to your question or not. He's not using his microphone. When we talk about the upwards, the growth segments, we've seen aggregates growing strongly, which is roughly 20% of our volume of freight. And if we look at the results which were presented and which you saw, we can see that price growth is taking place in these segments. As the CEO has mentioned, we have a longer path to cover because of detours, because work is underway on the rail infrastructure. As we've met in the past and talked, we have to incorporate that through the utilization of certain tariffs. What's going to happen in the future was your question, whether or not prices would continue to grow. Well, nobody is able to be a foreteller and say exactly what's going to happen. But the tenders we talked about aren't ones that come to an end at 2018. We're talking about tenders that pertain to the next year or the next few years, like Polish Oil and Gas Company, where a tender is being organized. And PKP CARGO has won this tender for next year for 2 million tons with a much higher price. We have INEA and others. We also have aggregates where we have more volumes being transported, and so we're verifying those contracts. And so we've seen that our rates in this segment have also trended up. I'm from Trigon. I wanted to ask you, we're in the second half of the year now. Could you say a few words about 2019? The most interesting segments of cargo, aggregates, and intermodal. You've got your rolling stock taken up for 100%. Are you prepared for the second half of the year? In the most interesting segments, I mean, in terms of accessibility to your rolling stock for next year, if you're already at 100% and above in terms of utilization rates. I'll try to say a few words about our preparations in order to do this, administer this freight. We can talk about rolling stock preparations. We're aware of the volume that's on the market to be handled. And so our modernization and investment plans were correlated to that. As I said, in the second half of the year, we would like to earmark more or less 500 million zlotys for rolling stock modernization. And this will primarily be dedicated to enlarging our transport capacity, having in mind the tenders we've won at the prices we've won them at. So there's no need to increase our transport capacity because we already have that to accommodate those tenders. So if we look at coal in particular, we will align ourselves to what happens in these tenders, whether or not we win them or not. So if we look at the aggregates, this market is growing swiftly. There's a lot of investments, infrastructural investments. So we think the next 3 to 4 years we'll see major growth. So if you look at the freight volume, we transported more than 12 million more, which is a lot more than 2 or 3 years ago. So this was possible because we've improved the internal organization of the company. because we did that with the same staff, with the same rolling stock. And we were able to do this because we managed that freight process better, the logistics process better. So, of course, you have to have something to transport that with, but you have to organize it well at the right time, at the right place, utilizing weekends and so on and so forth. So we wanted to utilize the rolling stock capacities we have on board. So today, we're using that at 100%, and we can see that the market is interested in absorbing even more capacity. So we're thinking about how much more we can do. It's profitable, even very profitable. And so the fixed costs will spread across much higher number of units. So our unit cost would fall as a result of transporting more and more. So we're participating in a competition to use flatbed cards as well as terminals. And so this is something that's being done by Zug. And so I think at least 50% of that would be funded by EU funds. And so this is something that's needed to underwrite our activities in the upcoming years through infrastructural investments. So we're preparing to meet that transport peak. This is something that's synchronized with our activity along the north-south corridor as well as the new Silk Road. So the strategy update we intend to deliver to you will contain those elements. And we're going to try to look overall at the marketplace in the long term and not just over a couple months. We want to look forward for years and decades. And I'm not sure if Vitek wants to say a couple words about the preparation of our rolling stock. Of course, we assume that we'll be able to grow the quantity of rolling stock steadily, because if we look at there's a freight volume on the market to be transported. What's also important, we look at investments to optimize our freight turnover. And so this year, we want to modernize some of our diesel locomotives where we would replace the diesel locomotive. And this would reduce our costs of operating diesel locomotives substantially. At the same time, it would give us more opportunities to utilize the rolling stock we have. And so, as the CEO has mentioned, we're looking at those areas that offer good prospects. We're thinking about intermodal transport as one of the key areas of growth. So we want to expand substantially our rolling stock there, as well as, the locomotives that we have at our disposal. Let me add, follow up. This year, you have 3.4% growth in freight volume. That's if you use rolling stock at 100%. How are you preparing for next year? Could we anticipate some major surprises that you'd be able to drive up your freight volume by like 10%? And will we see any surprises in the cost to infrastructure access or anything like that? Or maybe the speed at which you deliver freight? 3.4% growth is not the extent of our ambition. And it's not the case that we're very elated that we have 3.4 instead of 13.4. But if we look at the work on our commercial speed, we have to say that a lot more work is being done in terms of the kilometers of transport. And we have some limitations on the growth rate coming from the lack of decisions in previous periods to align rolling stock to the overall market situation. We can use what we have at our disposal, and we can try, of course, to amend the accessibility of our rolling stock, having in mind market needs and our freight capacities. So we're trying to align those things. We see the growth. We're trying to invest in such a way to be better aligned to the market in order to be able to transport more. I don't want to promise if we can bring that up by 5, 10, or 15%. We're still working on our budget and our approach. And so if we look at the freight volume, we want to deliver the greatest value to the owner and to generate profits. So we want to earn money on what we're doing. And so it's not the case that we have a dogma that we want to increase freight volume by 10 or 15%, maybe 4 to 5% at a good financial result and with the best earnings per share. This is where we're focusing our attention. And so we are ambitious here. And we want to have more freight volume on the European markets. We want to utilize our companies in Southern Europe better. We want to cooperate internationally better. And so the freight volume may oscillate around these figures that we're driving at. We're changing the structure. We're streamlining our operations in terms of our wholly owned subsidiary AWT. We want to realign it to the challenges we have on intermodal market for this to be an area of specialization in order to combine that north-south corridor to ensure that this is going to be well composed with the overall group. And so then this can deliver a positive outcome. So we also want to do transport of the most profitable products in a profitable manner, and that's something that we're aspiring to achieve. So our investment and organizational efforts are concentrated on doing that. Did I miss a question? So the costs of infrastructure. You asked about the cost of infrastructure. Perhaps my colleague could say a couple words, and so Leszek and Witek would. So I could respond, but I'll ask my colleagues to respond. Could we be surprised by costs here? The problem of obstacles to infrastructure. This is something that we've got good reconnaissance on. So the cost of access to infrastructure at a relatively stable price list, well, this is something that has a linear relationship with the work on improving infrastructure. Well, we have to work sometimes in such a way that we have detours of several hundred kilometers, and we have to change our traction from electrical traction to diesel traction. So I don't anticipate encountering any more even greater negative or adverse obstacles as a result of renovations of infrastructure. Quite to the opposite. Jointly with the management team of the rail infrastructure company, we tried to do everything to make sure that there is the least cumbersome as possible. If we look at this from the point of view of costs for next year, well, the new price list of access to infrastructure has been published, and our estimates indicate that this will not have a major impact on our costs. So the new rates show that the burden will be similar to this year. It's not a secret that the costs of energy, electricity pose a certain amount of obstacles to us on the power exchange, and this is something that we have to estimate. Well, we're looking at that, but if we look at the costs of fuel, so compared to the beginning of the year, at mid-year, the results that we've reported incorporate a 7% increase in fuel costs. So the question is whether or not that trend would continue. So it's still an open issue if we talk about electricity, but coming back to prices, prices of contracts. For the second half this year, next year, have already incorporated some estimates of possible price hikes. You also know the employee benefit costs that will come on board as of September, as we've communicated to you. We don't anticipate that this would have a major impact on our margins, the profitability we've reported. In this year, upcoming years, we anticipate that we would continue to improve our results steadily. I wanted to ask about your employee costs and payroll costs. You mentioned the motivation or incentive program for your employees. What sort of components may it have? What would be the variable portion of that incentive package? What would it depend on? So employee or payroll costs, as Leszek mentioned, well, we have these salary agreements have been estimated, and we anticipate their impact in the forecast for this year. And they would not have a major impact or contribution to reducing our profitability because we're becoming more efficient, have greater productivity. And if we look at the growth rate of revenues versus costs, well, we can say that our revenues are growing in excess of 8%, whereas wage costs are at 5.7%. So we can say that that relationship is under total control, and we've been able to align those things, and our decisions are rational and based on the economics, underlying economics. But it's not a secret that having in mind limited resources, we want to tap into our incentive system in order to be able to engage our employees to a greater and greater extent. This is something that we're working on. So we're going to think about this. Our goal is to make it part of the overall efficiency of the company. So in terms of our incentive program, if it will be enacted, it would be linked solely to efficiency. So costs nominally could increase. I don't want to estimate by how much, but this would be much lower than what would result from the effect obtained as a result of having more transport, higher profitability. And so this would improve our financial results. So I would like for people to earn more, but I would like for the company to earn more in parallel. So these processes can't be disjointed. So our wisdom and the essence of our work is to encode the system in such a way for both parties to be satisfied, to have a win-win situation. And so I hope that this year we'll be able to see the results of this incentive system. I wanted to return to investments on rolling stock in the second half of the year. What's the split for modernization and purchasing of new rolling stock? So Vitek, to add some comments, if I remember correctly, the bulk of this amount of the 500 million will be for rolling stock modernization at different levels. We have contracts signed with PEVAC and PESA about refurbishing locomotives. We also have a subsidiary, Cargo Tabor, and we're talking here about modernization work above all, because they give the best bang for your buck, because the costs and the return and the accessibility, we need to improve our capacity to transport goods as quickly as possible, because there are goods out there to be transported. So every month we wait, would reduce the amount of transport we could do. This is the 500 million that I've talked about. If we talk about, I'm not sure if you're so interested in what amount is to be assigned to locomotives and to other types of rolling stock. So the question could go on to ETEC. So the vast majority would be for modernization contracts of our diesel locomotives. We would like to purchase several electrical locomotives, which would have a high level of power. Then your capex to 2019 would be similar to your forecast for this year. We're still under the budgeting process, along with the controlling department, which is working on this quite strongly. And so as we're going to have the deliberations of our board of CEOs, we're going to be talking about the budgets for next year. It depends on the market situation, so I don't want to get ahead of myself. That would be a little out of place. So the fundamental thing is, logistics, the commercial department, and have to define our plans for transport. We have to plan our resources in order to have more resources in order to do the investments. But I think we're going to be able to give you the forecast by the end of the year. And so we've just started our budgeting process. If I remember correctly, we want to wrap up our budgeting process by November. My last question. This year seems to be quite good. So in December, I think the year will be even better. Have you thought about a dividend for 2018? Having a good year. That's a result of tough work. We're working hard to make sure that we have good results. As a dividend company, as a public company, we always think about that, and it's obvious. But the details, the final decisions, will be made after the end of the year. But it's an open issue at present, and there are some grounds, provided that the profits are generated. One small question from Haitong Bank. Is there any material risk of you taking an impairment loss on any assets you have in the group, like ABWT? We wrote down 18 million for AWT assets. So we're doing a review, a revaluation of rolling stock, so we don't have any other information where we would have to have additional impairment losses this time. He didn't use his microphone to ask his question, so I couldn't hear him. How much electricity did you utilize in H1 2018? I think it's in the financial statements. Fuel and energy have grown by 9.7%, and this is a response to the question, the first question about prices. Because if we talk about prices and doing calculations, we have to offset what's happening on the cost side. I'm thinking about in megawatt hours. In megawatt hours, how much electricity did you buy? I don't know the response to that question. It could also be terawatt hours. If you're interested in megawatt hours, we'll check it. I think Poland generates 6 terawatt hours. What percentage of those 6 terawatt hours of power production PKP uses? It's not a large amount. You said that rolling stock is utilized at 100% or above. So I understand that all of your rolling stock is being used to the full extent possible because there's not much coal being transported. So then we could say that If the speed of the trains on average is falling, then your revenue would fall. Actually, the freight turnover would fall. Well, it's a little more complicated than that. We don't anticipate, I think Vitek mentioned, the COO, we talked about the commercial speed at which we deliver transport. It seems to us, and based on our talks with the rail infrastructure manager, POK, we shouldn't see any more dips in that. We're at 20.3 or 20.7 kilometers, and it's the lowest in history. I remember 2 years ago, it was 27 kilometers per hour, so almost 30. So I think there's also the issue of using free days off work, making sure that we can ship goods and making sure that we can utilize rolling stock for the return trips. So it's a much more complicated issue in terms of planning the overall logistics process. And as we look at the last couple years, last 2 years, despite the lower speed from almost 30 kilometers to just above 20 kilometers, we've been able to have freight volume move up by 20%. So this is a result of optimizing to a greater extent the overall logistics work. So if we were to have free capacity, we could transport more and more aggregates because nearly 100% of the coal we contract we're able to transport. But if we're talking about the amount of aggregates out there to transport and where clients want to transport that, we could do even more based on their demand. But we're doing as much as we're capable of doing. Based on our internal logistics, we could do even more if we had more rolling stock. And we're trying to insource that or source that rolling stock in order to have the biggest piece of the pie as possible. If I look at the rail companies and the revenues, the companies that are construction companies, well, they haven't increased their revenues. I'm thinking, has this work really begun? Is it just at the project phase or at the construction phase? I don't think they've really entered the construction phase. So I'm not sure. Well, this is a bit of a theoretical discussion. If you go across Poland by rail and by road, you can see that there's a lot of work. I'm not sure what happens with invoicing. We're delivering at full steam ahead lots of aggregate as much as possible, as quickly as possible, and we're trying to do as much of that as we can. And their needs are even bigger, and we could do more if we were to have more rolling stock. Some investments are being completed, some are being closed, perhaps not everywhere. I'm not such a big specialist on the infrastructure, but if we look at the main road to Lublin, number 7, I think at the beginning of the year, this road should be completed. So some of the work will be completed, and perhaps some of the next work will be wrapped up in the near future. So if we're looking, Lower Silesia is one of the big directions for aggregates. So Wrocław, Kłodzko, and so we're following a single line, and that line will have even greater capacity, and it won't be closed, and we'll have a greater throughput capacity along that line. So if we look at those two lines, number 7 in Lower Silesia, it seems to us that we'll have much better results. But investments will be done elsewhere, which might have a lesser impact on our capacity to deliver goods. When I talk about Lublin and delivering coal to Bogdanka or to Inea, this is quite important to us, and we should have substantial improvement. And the same is Lower Silesia, where we're delivering a lot of aggregates. So, based on the information we have, we would say that there's some improvement in the transport, and that's why we want to have much more freight volume, especially aggregates. If I could add, if you're asking about you're at the project phase or the construction phase, well, we're at 35% up in terms of aggregates. That's the response to that question. If we look at construction and assembly work, it's up 24% almost. So that's also a response to your question, I think. If there are no more questions, we have one question online. This is a question from Raiffeisen Capital Management Austria. Could we share in details about the acquisition of Orlen Koltrans, Lotos Kolei, and what sort of impact would such an acquisition have on your revenues or profits? Acquisitions are part of our strategy and increasing our market share. As I mentioned, our major specialization in the upcoming years should be intermodal transport and the north-south corridor and the new Silk Road. And so acquisitions and activity here. So sometimes we might be present through commercial or sales offices. And so we're looking at this quite strongly. And we're analyzing that. And in our strategy, we want to accentuate this strongly. And so when we announce the strategy update in the fall, we'll be able to talk about this more. If we talk about Koltrans or Pomed or other operators carrying bulk goods, we're going to analyze every possible project. We're not engaged in talks at present. Perhaps somebody knows more since the question has arisen. And so, of course, synergy is something that can be justified, and we're looking for the opportunity to grow. And if there's a company that would like to work with us on a capital footing, we're more than open. But it seems that the best prospects, strategically speaking, and I would emphasize this, is to work in intermodal transport, and this is where we see the bulk of our investments also for in terms of acquisitions. Any other follow-up questions at this time? If not, we would like to thank you very much, ladies and gentlemen, for your attendance and for participating in this conference, and we would invite you to have some warm refreshments with us in the room next door. Thank you.